What's going on, guys? William, and today we're going to go over why real estate is not always a good investment. So a lot of people say invest in real estate and do either flipping or wholesaling or buy and hold strategies such as myself, but how do you know which properties are good? I have 3 examples, and they go from the everyday fine to the good location to the very high-end A-class home, which I'm about to show you. Let's dive into it.
Welcome to the Smack Fest, the beat down. The SWAT team is here on another beautiful day of shutting the week down.
And if we're just meeting, my name is William Dauria. I am a real estate investor full-time. I invest for passive income. I have a portfolio of single-family, multifamily, and commercial property. I live off of passive income, and I want to show you how to do the same. So, in no particular order, we're going to start with the first investment, or I should say number 3. We're gonna work our way backwards, only because it's my favorite house on this list. It's in my favorite neighborhood, and well, it's just awesome. Here it is. Okay, so here's the first one on our list. It is just north of 9,000 square feet. It is in my favorite neighborhood, and it also has an attached airplane hangar. Yes, and for those who don't know, I am a private pilot as well, so I will be getting a house very similar to this. Maybe even buy this off this guy one day. There's an office. If you ever see me in that office in the background shooting, you know I pulled the trigger and I ended up buying this property. It is a 3-story property. I have no idea why I would need 3 stories. There's the media room because, well, we all need a media room, don't we? And there's the airplane hangar, guys. And this is aside to the attached garages over there as well. So, this can fit several different airplanes. I actually want a hangar to fit 3 airplanes. I think if you put the tail in the corner and you work it, you could probably make it happen. So these 3 properties, we're gonna look at 3 different things. We're gonna look at if you were a buy and hold investor, such as myself, like renting it out, or you were a flipper or wholesaler, or you lived in it as your primary residence. Now, I know a lot of people might not actually consider that real estate investing, but if it appreciates to the point where it almost pays for yourself, you're an investor, you don't even realize it, because when you sell it, you retain majority of the property taxes, if not all, as well as possibly electricity costs, and you'll walk from the house with paying little to nothing out of pocket. And in that case, you did well as well. So as a rental property, I'm pretty sure you know the answer, but we're just gonna start with this because it's an awesome house. The clientele is gonna be harder to come by. It's a very niche neighborhood. You have HOA fees associated with it. As a rental property, it would be a terrible investment, a horrendous investment, unless you had this property in a place like Manhattan, or pre-coronavirus, by the way, or maybe Los Angeles, and your single play was massive appreciation that you will most likely obtain in the event of a sale or the inevitable sale in the future, recapturing the profit that way and only that way. Would it make sense as a rental property? However, here in North Texas, this would be a terrible choice as a rental property. That's why you generally never see them as rentals. Okay, the next is a flipping property. Guys, if you find this property and it is under market value enough for you to flip the property, it's a no-brainer, guys. Some high-end properties yield some of the best profits. Now, I'm not even talking margin-wise. I'm just talking, hey, I made 100 grand and it took me 60 days. Not a bad day, guys. So this property could absolutely be a good deal as a flipper. Matter of fact, 4 doors down, there was an REO property. That's a bank foreclosure property that just sold for $619,000. It was relisted in the 8s and it sold after that. So that was most likely a flipper that came in, bought a house from a bank, from a foreclosure, took it off their books, put it back at market value, and sold it that way. So not only could this been done, but it's been done just a few doors down. As a wholesaler, it's going to be the same thing. You just have to have it at an even more discount because you are going to be selling it to a real estate investor or a flipper, for instance, because these houses only really go to flippers because they're just too big. So as a wholesaler, your job is going to be tough. But if you can get it at an even steeper discount, there definitely is money to be made. Now, moving on, as a primary residence, this house has been appreciating approximately 5% per year. Now, if we did the math, that covers approximately 80% of your living expenses yearly. And that's also if appreciation continues and doesn't really take a curve going north or south for that matter, but generally they curve up. So imagine being able to stay in this house effectively for 20% of the payment that you're actually seeing. Because when you go to sell it one day, if you sell it, you will retain not only 80% back, but that's most likely a minimum number. And the longer you hold this property, the better chance of you retaining 100% of your money and you get to live in a house like that. Now that, my friend, is a smoking deal. Number 2 is an everyday find online, guys. I can find hundreds of examples just like this. Now, how do you know if this house in this North Texas area is even good? This one, for instance, is $180,000. It rents for $1,400 per month. And the 1% rule on this doesn't even work. 1% is basically if you have a $100,000 house, it needs to rent for at least $1,000 per month before you dig into it a little deeper. This doesn't meet that right off the bat. So we already know as a rental property, this is not going to work. However, you can find properties just like this that will. You just have to keep looking and you have to know what you're looking for. As a flipping property, this is probably considered your bread and butter. Now, this price-wise is right in the sweet spot of where everybody likes to be. Also, you can wholesale it to an investor if it needs a little bit of updating, or you just got it for a really good deal. But this is most likely going to be one of two. It's either going to be a flipper or wholesale property, or it's going to be a primary residence. Now, when it comes to a primary residence, this particular house in this particular neighborhood, I looked at the trends over the years. This is what they look like. The appreciation is basically going up with inflation. It's like 3%, maybe 4% a year. As far as like massive appreciation that some North Texas homes get, this one's been kind of stale. It's been just kind of a slow rise. You know, this is like an everyday kind of find. There's really nothing fantastic about it. It might be a decent deal, and one day you might be able to sell and get out from under it, but there's not any large equity recapture. There's not going to be a chance where one day it's necessarily going to be worth 400 grand one day because you got such a good deal, because these houses just don't go up in value like that. Because 2% on 180 grand is not 2% on 900 grand, for instance. So the numbers here, you just have a lot less to work with. And being myself as a buy and hold investor, this property doesn't work. It's something I see 100 times a day and I skip over very, very quickly. Moving on to the next property. This property is actually one of my personal properties, and I purchased this back in the day for $160,000. Today, it is currently worth $300,000. You might be asking, have I owned this the last 30 years? And I'm gonna say no, because I'm about 30 years old. So this is really what happened. I bought it in a highly appreciating pocket in North Texas, and in the last 4 or 5 years has exploded in growth. I did get a little bit lucky because this growth was much more exponential than I had anticipated, basically doubling the home's value in just about 5 or 6 years. Now, it's worth $300,000 today. I rent it for $2,100, but I'm only in it for about $160,000. So you take $160,000 of my all-in money, it's renting for $2,100. My payment before I did the cash out refi was $1,100 a month. So my payment was $1,000 less than my current rent. But because it has appreciated so great, I in turn did a cash out refi on this property. The bank literally gave me $40,000 more than I paid for the property. It still cash flows, and I actually am in the market to find another property that will cash flow as well with that money. So it turned out to be not only a good deal, but a fantastic deal that I took advantage of the equity on, and this one made tons of sense, but it made sense from day one as well. So as a flipper, this house could easily be a flippable project if you could pick it up for, say, 225 to 240 range. you could basically go in there, do the minimum, whatever needs to be done. Right now it's turnkey, but every property typically needs something. And then you could turn it at 300 grand. You could walk at 20, 30 grand, just needing cosmetic touches, be in and out of that property a handful of days. Now, where I believe this one would probably be the most beneficial, other than the buy and hold strategy, obviously, would probably be as a wholesaler. If you found this house, guys, it was an off-market property, it's in a cul-de-sac, it backs up to a creek, like you can't duplicate where the location actually is on this. So if you were to find this property as a wholesaler on an off-market property and you were to make an offer and you know you're well below, this would be the easiest house, in my opinion, to offload to an investor such as myself, because we see the potential in this property. I don't care if it needs a lot of work. The location itself just screams buy me. Also, did you know that by having a house in a cul-de-sac could potentially raise the home's value by 15%? We all basically want to be in a cul-de-sac. Nobody really wants to be stuck in the middle of a street staring at another house if they don't have to. And as a primary residence, this would absolutely make sense as well, because you could do what's called a HELOC. That's a home equity line of credit. Therefore, you bought a house for 160 grand, the price went through the roof, and then you recapture that equity while staying into your house, and then you can reinvest that excess cash into real estate, generating you more passive income. So in these particular examples, buying a house that generally everybody wants, a 3 to 4 bedroom, it's not overly big, in a good area, is going to be your best bet for a long-term buy and hold investor such as myself. The other two were, one was an extremely large, very nice example, doesn't work for an investor, and the smaller one was a perfect example, except for the numbers were too high, but the appreciation was kind of stale. So if the numbers were, instead of 180 grand, it was 110 grand, the cash flow opportunity would be fantastic. However, the appreciation on it would be kind of You want to find a property, most likely distressed, that not only can cash flow well, but is also in a good area, giving it massive potential upside in the future that you can come back around and recapture as well, along with the cash flow. Guys, thank you so much for watching. Consider smashing that like button, hitting the subscribe and notification bell if you haven't already, and let me know in the comments below, what kind of investor would you be, or are you? Are you a flipper? Are you a wholesaler? What's investing like for you right now? And if you have any questions, I want to answer them personally. And until then, I'll see you on the next one.